Well, welcome back to Finance Uncut. On today's episode, silver demand squeezing silver supply. Silver demand is squeezing silver supply, which I think can ultimately push it beyond its all-time high, up to triple digits. And I'm not the only one that thinks that. Jim Rogers just recently said that he thinks that silver over the next year or two is going to break its all-time high and could push triple digits. Doug Casey has just recently said that he sees silver being at least $100, maybe even $200 over the next couple of years. Rick Rule says it's going much, much higher. Keith Neumeyer from First Majestic believes that silver is going to triple digits. And personally, as someone that's invested in silver and used it as wealth cycles to create wealth by building, turning my silver into other assets and so forth, my silver, I am holding on to this thing as I see the macro outlook for an inflationary decade ahead, definitely an inflationary several years ahead, with deep negative real rates. And also with Basel III, and I'm going to do an update on Basel III shortly. So I'm not going to go into that right now, but I think these are all bullish cases, and I'm not selling my silver until it's at least triple digits, but then I'll also measure that against other assets. So if other assets are very expensive at the time where silver is still over $100, I won't sell my silver. I'll measure my silver and my gold in relation to other assets. So with that, let's cut to a clip with Rick Rule on the silver demand squeezing the silver supply.
I believe I can. I'm no longer a Sprott employee, although your viewers should listen to my answer in the context of the fact that I'm a large Sprott shareholder and I benefit indirectly from people buying the Sprott physical products. Sprott is required, and investors should read the prospectus, which is published, to buy so-called good delivery silver, which is silver that is in system and could be delivered through the COMEX or the LBMA. We seldom buy in the futures markets. In fact, to my knowledge, we've never bought in the futures markets, but rather always bought from banks. We, beginning 4 or 5 weeks ago, began to have an interesting time getting physical silver. I remember an earlier discussion that you and I had where I said that there was an extraordinary shortage of retail product. The bullion dealers were having to charge 25, 30% markups on retail product. We were buying predominantly 1,000-ounce product, which was in fairly good supply. But we bought 50 million ounces of it over 12 months, which means that anecdotally, at least, we used up what was available at the Royal Canadian Mint, and then we used up what was available elsewhere in Montreal, Ottawa, and Toronto, and then we used up what was available in Chicago, and then we used up what was available in New York and Boston, any place within reasonable trucking distance of the Royal Canadian Mint, which is where we store our silver. We were forced, as a consequence of that, to ask the Royal Canadian Mint to establish sub-custodian agreements with other depository facilities around the world. Because we can't take delivery receipts or deposit receipts. We can't take promises to deliver us silver. We can only take physical silver. And we were out of wholesale sources of supply in the part of the continent that is within trucking distance of the Royal Canadian Mint. Because now we can buy silver in London, we can buy silver in Zurich, we can buy silver in Singapore, and store it with the sub-custodian until such point in time as we can fly it to Ottawa, we have more recently been able to accommodate our purchases a lot more easily. It is certainly true that when we take silver out of good delivery in system, we reduce the silver available for delivery against futures contracts. That part is certainly true. It's important to know, though, that the silver we take out of the market doesn't come very often out of the good delivery silver that's posted either at the LBMA or the CME. This is silver that could be contributed, that could be used as silver securing futures contracts very easily. It's in system. So we certainly do reduce the amount of silver inventory that is available for transfer into the LBMA or the CME. I suspect, although I don't know this, I don't want to be quoted on this necessarily, but I suspect, given how much silver we've bought in the last year, that we have been the largest buyer of physical silver in the world. Certainly, I think we've been the largest buyer of in-system silver in the world.
Silver demand is squeezing silver supply. So we can see that the COMEX is being drained. Also, the SLV Silver Trust is also being drained. Not that they really have anything there anyway, but the Sprott Physical Silver Trust has almost 150 million ounces now. From the start of the silver squeeze, they've added almost 100 million ounces since the start of the silver squeeze. And in that time, the paper price has been smashed because the Fed came out and said that we're going to taper, we're going to be raising interest rates in the years ahead. And so we saw the silver price, the paper price get smashed. However, watch what the Fed do. Watch what central banks do, not what they say. Because the Fed's balance sheet is up $150 billion in 2 weeks and over $700 billion since the beginning of this year. Yet they say QE2 is what? Not QE2, but QE is ending. I mean, it was supposed to be just QE. Just one QE, that's it. Not QE 1, 2, 3, 4, 5, infinity. So watch what the Fed do. Watch what central banks do, not what they say. So much for the talk of tapering. So the Fed, I said, that they in 2 weeks had increased their balance sheet by 150 billion. Well, over the last 4 weeks, it's 200 billion. But it's not just that. They've also bought $162 billion of mortgage-backed securities in the last 2 months, the largest since March. So they may say they're tapering, they may say they're doing this, but they're not. And same thing in the RBA, in Australia. The RBA have said the same thing. We're going to continue with our QE purchases. And so watch what they do, not what they say. An Italian Prime Minister, Mario Draghi, the former ECB chair, says that more stimulus is needed to restore economic growth to its pre-pandemic level. Okay, one, that's bad economics. Just printing more does not create prosperity. We know it's an inflation tax, but this is what they're thinking. This is what these elites, these leaders in government and in all of our central banks, this is what they're thinking. So watch what they do, not what they say. So I had to share this New York Times article that shows that the records reveal how often federal officials engage Wall Street in a moment of crisis. So who'd they turn to? They turned to BlackRock. What'd BlackRock say? Yeah, look, just turn on the printing presses, give us some cash, we'll set up some special purpose vehicles, and we'll just buy every asset in town. You'll own nothing and you'll be happy. So I don't usually talk about Bitcoin on this channel. Why? Look, I'm bearish on Bitcoin. I'll be honest. I'm on the sidelines cheering it on. I hope it succeeds. Bitcoin is a war against fiat currency. I love everything it stands for. But I have researched Bitcoin and cryptocurrencies, decentralized cryptocurrencies for years, and on a whole range of things, whether you're looking at Tether or other things, there's just so much risk. But the biggest risk is governments aren't going to give up control over the currency supply. They just won't. So we've seen the price of Bitcoin fall under 30,000 from its peak of 65,000. So it's had a big fall. Now we have seen flows leaving Bitcoin. There's no doubt about it that there are people selling. Now, some people like Peter Schiff say it's the whales that are selling. You know, they've been pumping it up, getting retail investors into it, and dumping it at the same time. But it is, there's a lot of flows out of Bitcoin at the moment, and a lot of people have been hurt by buying in and panicking, selling, and have been hurt. Now, I am getting to a point with this, but just bear with me for a second. So here, Jesse Felder, such a system sounds reminiscent of a Ponzi scheme. That's because it is. Those who get in at the start must continuously draw in new believers to keep the whole thing going. Look, as I said, I've got a lot of issues and a lot of concerns with Bitcoin. And ultimately, it comes down to Bitcoin versus government and central banks. And I think when that war is ultimately played out, you know, as much as I'm cheering on Bitcoin to win, because I want the free market to win, I hate government. I hate central banks. You guys know me from watching my videos. But we've seen what's happening in China. We see that the Bank for International Settlements won't help Venezuela, not Venezuela. What's that country that's just adopted it? El Salvador. They're not helping them. We've got banks in South Africa blocking customers from using their debit and credit cards to purchase crypto from international exchanges. There's other issues, as I say. But the good news, folks, is coming in a sec. So this is the battle. Central banks are going to bring out their central bank digital currencies. It's a matter of when, not if. And I think that when is a lot sooner than I first thought. So central banks aren't going to want any decentralized cryptocurrencies. So as much as I hate it, I don't want it to be the case. But central bank digital currencies are coming. And that means a whole range of things. That means control. That means a loss of freedom, a loss of privacy. All the things that I fight for. And so I'm cheering on Bitcoin to work and to succeed. However, where I think that is going to fail, I think it could be good news for gold and silver. So cryptocurrency, central bank digital currencies, having digital assets, I don't think it is wise with central bank digital currencies. I think central bank digital currencies, you want to hedge against central bank digital currencies, you want analog. That's gold and silver. Physical gold and silver. And I've said this over and over before that I hold a percentage of my portfolio in physical gold and silver in 2 vaults on the opposite sides of the country. And I have physical gold and silver very close to me, very close access. Then I have gold and silver miners, and I trade options on those. I sell out of the money cover calls. I sell naked puts. I then have explorers for that exponential asymmetrical type play and I've had tremendous success in that field. So that's how I play. And then I've got the whole commodities, both agricultural commodities and other hard commodities. But once again, even the deflationists like Jeff Snyder, Brent Johnson, they think that ultimately this is going to fail, even central bank digital currencies, and that governments are going to have to, there's going to be chaos and there's going to be pain, and governments are going to have to bring back gold, even if they bring back gold for a short time, because governments and central banks don't really like gold at all either. But to bring back confidence, they're going to have to bring back gold. When we have a look at this chart, gold as a percentage of the Fed's assets, I think it speaks for itself. So the question is, does gold get reset? Now, I'm not going to talk about that in this video. However, I've done a video, gold 50,000 and silver, well, question mark, with Luke Gromen. So I'll put a link in the description below if you want to have a look. This is all about revaluing gold to get us out of this problem, this mess that we're in, this debt problem that we're in at the moment. So I'll put a link in the description below. I'm not going to talk about that in this video, but that is a question. Does this happen? And I just wanted to share a picture. My business partner brought in 10-ounce bars of silver into the office the other day, and I took a picture of them. I just think these are beautiful bars. If you don't own, these are the Queensland Mint bars. And folks, I know there's many of you who are frustrated gold and silver investors. That's exactly what the bullion banks and the paper shorts want you to feel. They want to destroy you. They want you to hand back your gold and silver because they understand that it's true wealth. They want to destroy you so that you hand back your gold and silver and get out and quit. But I think also another positive thing for gold and silver is when central bank digital currencies come, and this is why I say people should prepare now before central bank digital currencies come. Because when decentralized cryptocurrencies like Bitcoin and that are ultimately destroyed, those people are going to need a place to go. And the great thing about Bitcoin and cryptocurrencies is they've educated a large portion of people around the world about sound economics, about Austrian economics, about hard money, about the fraud that is fiat currency. And so when the decentralized cryptocurrency, when central bank digital currency kills them off, in whatever capacity that is, I don't know which capacity that's going to be, there's going to be more demand for gold and silver. I just think that it's wise to protect before central bank digital currencies come in, before this war, this battle really plays out. And even our mate Jeff Christian from CPM Group is bullish on silver moving forward. Not as bullish as the rest of us, but even he says that the price of silver is determined by investment demand, not industrial demand. He calls it something else, but industrial demand. It's the investment demand. And we've seen the investment demand into silver over the last 12 months, but especially since the silver squeeze. And I believe that's going to continue because people are waking up. People are awake. Yeah, some people are frustrated. Some silver investors are frustrated that they haven't seen these gains. But silver and gold, you want it when there's chaos. And I believe that's where we're headed. So anyway, guys, love to see your thoughts and opinions in the comments below. If you like this video, please hit that like button. Give us that thumbs up. Really, really do appreciate it. Anyway, guys, take care, and I'll see you again on another episode of Finance Uncut.